Yeah, and we'll be talking about it in the France 24 debate. That's in some 30 minutes' time. We'll talk about it now with our business editor. Let's say hello to Kate Moody.
Hi, Francois.
So we're waiting on these announcements. They've kind of let the cat out of the bag, haven't they, already, with a lot of them. It's nonetheless tricky how you fine-tune it this time.
Yeah, absolutely. And however it works out, businesses really going to be waiting anxiously to know when they're going to be able to open their doors and under what circumstances. When those measures were announced nearly a month ago, it was really a blow to businesses that were just getting back on their feet and hoping for a strong lead up to that all-important end-of-the-year holiday season. Well, a new report from the French statistics agency INSEE earlier this Tuesday showed that business confidence had dropped sharply in November, with managers across the board expressing more pessimism than they had in months. The outlook especially weak in the retail and services sector. Overall, business activity in France dropped around 13% during the second lockdown in November. That's compared to around 30% contraction during the first stricter lockdown this spring. INSEE has forecast GDP to shrink around 9 to 10% for 2020 as a whole, and its latest labor figures showed unemployment climbing to 9% in the third quarter of the year. Now, there has been significant financial aid for businesses and households in France, some 470 billion euros in loans or direct support already outlined by the government this year, and an additional 20 billion of relief funds added into this year's budget. The French Parliament has just officially approved that budget earlier this Tuesday. Many industries will continue to receive support in the short to medium term. Restaurants, hotels, and travel companies in particular will need state funding as they try to recover. Let's check in on the day's trading action. Now, the major European indices have closed higher, gains of between about 1.25% and 1.5% in London, Paris, and Frankfurt. More good news about vaccine research boosting investors, as are signs of progress from Washington about the transition from the Trump to Biden administrations. Now, that's contributed to a rally on Wall Street as well. The Dow Jones jumping some 500 points to break above 30,000 for the first time in its history. It means it's climbed 10,000 points since Donald Trump was sworn into office in January 2017. And the outgoing president, in fact, briefly came into the White House briefing room in the last few minutes, calling that a sacred number being passed under his watch. The travel industry has cheered the prospect of a coronavirus vaccine, with airline stocks in particular rising in recent weeks. But even before a vaccine is widely available, the industry has encouraged governments to expand rapid, systematic testing for potential passengers in an effort to boost travel. The International Air Transport Association says that airlines are on track to lose nearly $160 billion this year. That's around 60% of their revenue, and that passenger numbers may not recover till pre-pandemic levels until 2024. The head of that group, which represents about 290 carriers around the world, says there's likely to be a short-term boost in travel numbers through the end of this year, but long-term challenges will remain.
The reason or the motivation for flying are perhaps changing. We forecast a pretty strong demand for personal motivation, tourism, visit friends and relatives. That remains pretty strong. For the business travel, it's another story. And we forecast a recovery of the business travel later than the personal motive travels.
Moving on to some of the day's other business headlines now. General Electric is said to be planning more job cuts in its jet engine business. The Wall Street Journal reports the American giant has warned its employees that difficult business conditions will require more layoffs in the coming 18 months. GE's aviation giant has already cut a quarter of its 52,000-strong workforce this year. Global oil markets remain well supplied following a strike on oil facilities in Jeddah. Saudi Aramco says that domestic fuel supplies won't be affected, while the International Energy Agency says the sector must remain vigilant to ensure energy security around the world. And the UK's car industry has once again warned of the possible cost of the government not reaching a trade deal with the European Union. Manufacturers could face some 62 billion euros in tariffs over the next 5 years unless a Brexit agreement is clinched by the end of this year. Negotiators have so far failed to break through their differences, with the UK's transition period due to expire at the end of December. And Francois, in a no-deal scenario, the UK would automatically revert to trading with the EU under World Trade Organization terms. For the car industry, that would entail a 10% tariff on everything that's exported. So the stakes are really high.
Yeah, many thanks for that, Kate Moody. We'll have more business news for you later.